Is Alphabet's reign as the tech titan truly at an end? The answer might surprise you. While headlines scream about its slow death and inevitable collapse, the numbers tell a different story. Alphabet, Google, just posted a 14% year-over-year revenue surge in Q2 2025, with ad revenue climbing 10.4% and operating margins hitting near-record highs. But here's where it gets controversial. Despite these strong fundamentals, analysts are quietly downgrading the stock from strong buy to buy. Why? Let's unpack the paradox. First, the search market share, a digital kingdom built over 2 decades, slipped just below 90% for the first time since 2015. That's a headline-worthy drop, but context is key. The decline is measured in fractions of a percentage point, and with competitors like Bing and DuckDuckGo still trailing far behind, this shift is more of a ripple than a tsunami. Most people miss the nuance here. Even a 90% market share is a fortress position, and Alphabet's ad revenue remains resilient. But the real fireworks come from its $85 billion capital expenditure plan for 2025. This isn't just throwing money at AI, it's a calculated bet. By investing in startups like Anthropic and beefing up its own AI infrastructure, Alphabet is positioning itself as both a player and a platform in the next-gen tech arms race. Could this be the Google 2.0 playbook? Critics argue that OpenAI and Microsoft's partnership might outpace Alphabet's efforts. But defenders counter that Google's data moat and cloud expertise give it a hidden edge. Now, let's talk numbers. At a blended P/E ratio of 23 times, the stock trades near what many consider fair value. For investors seeking steady returns, the downgrade reflects a shift from aggressive optimism to cautious confidence. The 8 to 10% annualized returns implied by this valuation are solid, but not transformative. Enough to justify holding, but not enough to justify all-in bets. And this is the part most people miss. The downgrade isn't a death knell. It's a recalibration. The market is demanding more proof that Alphabet can dominate in AI-driven advertising, cloud computing, and enterprise tools. Can it adapt without repeating the mistakes of its competitors? Or will the same innovation that made it a giant now become its Achilles heel? We'd love to hear your take. Is Alphabet's golden era fading, or is this just a temporary blip in its long-term dominance? Share your thoughts in the comments. After all, the future of tech isn't written in spreadsheets. It's written by the people who dare to challenge the status quo. Analysts note, I hold a long position in Google, MSFT, and AMZ through various investment vehicles. This article reflects my personal views and is not investment advice. Past performance does not guarantee future results. Always do your own research before investing.